Welcome to Markets Now. I'm Michelle Rook with Oliver Slope, Blue Line Futures, and lots of green on the board and grain and livestock futures trade on Friday. And the one exception was old crop corn. But Oliver, let's just talk about the general mood of the marketplace on Friday. More risk on with some better trade and economic headlines.
Yeah, it was risk on. A lot of it started a little bit earlier in the week with some positive earnings out of some big tech giants, including Meta and Microsoft. And then we got some better than expected jobs data in the non-farm payrolls report. So that obviously put a little bit of wind in the sails, so to speak, in the outside markets. And then Friday afternoon, got some positive headlines regarding China's maybe willingness or more willingness to talk to the United States with regards to trade. So we definitely saw that boost the optimism ahead of the weekend. The corn market, though, didn't really respond, especially in that old crop contract. And I think a lot of that stems from a breakdown earlier in the week. There was a cluster of major moving averages, including the 20, 50, and 100 day, which came in from 476 to 481 in the July contract. And once we broke below there, you really saw the selling start to accelerate. And then over the last two sessions, you saw that pocket act as resistance. So it looks like that's going to be a big pivot pocket to keep an eye on going into next week's trade. If the bulls can't achieve consecutive closes out above here, I wouldn't be surprised to see the selling maybe continue with the downside targets coming in near those March lows in the mid 450s.
Yeah, and it's interesting to watch those bear spreads considering we've had still very solid demand, right?
The demand has been strong, and I'm honestly a little bit surprised that we broke as hard as we did earlier in the week. But again, I think a lot of that is technical because fundamentally, I think the market still has a decent reason to trade to the upside. But the technical breakdown is kind of keeping buyers at bay in the meantime. But I do think that we're at an interesting time of year for the grain markets. It is going to kind of keep the push and pull alive with regards to bullish and bearish headlines, that being kind of revolving around weather in the United States and how that's going to play out. And then obviously the push and pull from the trade headlines. That's going to keep things interesting for the next couple of months. Soybeans, I think, held really well. Unlike corn, they were able to hold that cluster of major moving averages, 1036 to 1040 in that July contract. That's going to be a significant line in the sand. If we see a break and close below there, I think you could start to see some accelerated selling pressure like we saw in corn this week. But the fact that we were able to hold that keeps my optimism alive there.
Yeah, I was going to ask you, if the China headlines stay positive, do you think we'll take out those April highs? And you're saying, yeah, you think so.
You're looking at the recent highs, 1060 to 1070. If we get out above there, maybe momentum can carry this market higher and make things a little bit more exciting, especially if we do get maybe more substance with regards to trade with China. A lot of this has just been headwinds or jawboning and hot air. If we can get some substance on the back of these trade headlines, potentially that gets us out above that resistance level.
Do you think that corn and wheat will react as well to other deals outside of China? There's talk of Japan, India, the EU.
There has been a lot of talk. I think Japan coming to the table and buy some beans. I don't know how meaningful that would be on a percentage basis, but just the fact that we're making deals is a step in the right direction. And then looking at the wheat market, the funds have been net short since July 5th of 2022. We started to see a little bit of short covering here in the back half of the week. Hopefully, we can start to see some more of that. It feels like every time we do get a little bit of short covering in the wheat market, it is very short-lived. The fund's been short for a very long time. So if we start to get some positive headlines with regards to trade and get out above some technical levels, maybe that spurs some momentum kind of across the agricultural space, specifically in the grain markets.
So let me ask you specifically then, with what you just said about wheat, was today just a short covering bounce off these contract lows from yesterday?
I think that's mostly what it was. Wheat has been a laggard for what seems like a lifetime at this point. Seasonally, we can start to see some strength in wheat in the back half of the month, and hopefully we can see that play out this year, hopefully maybe even a little bit sooner than that. But the fact that we finished near unchanged on the week after how we started the week, I think is really quite encouraging. We kind of got back towards the 20-day moving average today at 548. 548 to 550, that's going to be a big hurdle going forward. If we can get out above there, maybe we find ourselves near 570. I think that's going to be kind of the bigger inflection point for the market. So the bulls, although it was a strong finish to the week. They still got their work cut out for them above 570, and maybe you finally start to see that spur some more short covering from the funds.
Okay. We had a pretty good week in the stock market, as you mentioned, especially with some of the, the strong economic news. We do have the FOMC meeting coming up next week, and you've got this OPEC meeting. So talk me through how that's going to impact the market.
Well, Monday we do have an OPEC meeting. The talk is that we're going to see production increases of about 400,000 barrels. And a lot of that has been, I think, hopefully digested by the market. And that's been the rumors throughout the week, which has certainly weighed on the crude oil market. If they come in more than 400,000 barrels, potentially that really kind of blacks crude a little bit more, and we do get closer towards that psychologically significant round $50 number. Part of the reason regarding the speculation of increased production is to get some of these countries to be more compliant, specifically Kazakhstan, who continues to overproduce their quota. And really the only way for OPEC plus to punish those countries is to lower prices and make them suffer that way. So expectations for OPEC are production increases. We'll see if that comes to light or not on Monday. And then Wednesday, we've got that big FOMC meeting. I don't know that the expectations are very high for any major moves this month. But I think kind of setting the line going forward is going to be what's important to see what Fed Chair Jerome Powell says about that.
So one market, obviously, that's been hinged to the recovery in the stock market has been cattle, but really the cattle market has been pushed here by more record cash this week, and we finally hit new contract highs again here today. So does that leave you optimistic we're going to take another leg higher here?
The cattle market, the path of least resistance has been up and to the right for that market if you zoom out and look at it, really since 2020, we've been on a tear. There's obviously been some ups and downs between here and there, but recently this rally over the last couple of weeks has been remarkable. We were up about 285 in the June contract this week, which puts the rally for the last 3 weeks at about $15. And the fact that we've been able to rally $15 in 3 weeks and the RSI, or the relative strength index, is still below overbought is quite remarkable. Now, the cash market and the outside markets, obviously a big catalyst there in the tailwind for cattle here recently. I wouldn't be surprised to see that continue. The cash market still well above that June board, so that's going to be something to keep a very close eye on. Coming into Friday session, I was a little bit nervous, thinking that the June contract had every single reason in the world to rally a lot more than it has this week, and it couldn't get it done. So I've got a little bit of a caution flag up, but that cash market and demand continues to be very, very strong there.
I know, I'm with you, because after Thursday's action, I thought, man, this market is looking a little tired.
Yeah, that's what I thought. When you look at the cash market just breaking out to the upside, you've got the equities kind of giving an all clear signal, and cash trading $10 to $12 above where the front month futures are. You would have liked to see a little bit more. So it does seem like the futures market is a little bit cautious here for the moment. I think that could probably maybe even be a little bit more true for the feeder cattle market, which seasonally are coming into a little bit of a weaker time of year. May, typically isn't super friendly for the feeder cattle market, and the index isn't really rallying as much as the cash market is for live cattle. So something to keep a very close eye on there, where it may be, one of those things where the funds have just, basically used up all their powder in the cattle market and really don't have any more room to add to their net long position.
Right. Okay, the hogs came on Friday. Was that China hopes, do you think, or was there something else fundamental driving it?
I think the Chinese headline certainly helped things. All in all, it was very choppy, which aligns with the seasonal averages looking at the last 5 to 30 years. $4 range here, and we basically closed in the middle of that range, that $4 range being for the week. There's a lot of support near 96.5 to 97.5. That was a breakout point from April 16th and has acted as support through this week's trade, and that coincides with the 20, 50, and 200-day moving averages. So I think so long as we can defend that and we continue to get good news out of China, I think there might be some upside potential from those levels. Just kind of how high could we possibly go is going to be the big question. Looking at the fund positioning and the lean hogs, At the end of last year, we talked about the risk of long liquidation when funds were long nearly 140,000 contracts. Well, that has since been alleviated. Right now, funds are long only about 50,000 contracts, which is a relatively neutral position. So if we do get more positive headlines in the lean hog market, that does open up the door for potential reinvestment from the fund participation.
All right, thanks so much. That is Oliver Slope Blue Line Futures and Markets Now.